You thought we reached maximum danger last time? Well, think again because today's ETFs, they don't just light up the dashboard. They've upgraded to flamethrowers. Hold on to your seatbelts, folks. This is going to be a wild one. The Longpoint ETFs we will be highlighting today, they take the danger and they crank it up to the extreme. These ETFs don't just move fast, they're designed to multiply those moves both up and, of course, down every single day. Played wrong, oh boy, they can burn through gains faster than you can say daily reset. Now, you might be thinking, Candace, didn't we already cover the scary stuff? Sure, we did, but these ones deserve their own spotlight because while the names may be new, the risks are all too familiar. These funds can deliver triple-digit excitement or triple-speed disaster. Yikes. And most investors, well, I'm hoping most investors should approach them with the same caution you'd give a live wire in a thunderstorm. That's for sure. So let's talk about what makes these Longpoint ETFs so, I don't know if I want to use the word, but we'll say special. Longpoint is one of the newer players on the Canadian ETF scene, and they've come charging out the gate with a full lineup of 2x and 3x leveraged ETFs. They call them Save for the 2x and Mega for the 3x, which kind of sounds fun until you realize what that really means. Double or triple the daily returns or those daily losses of that underlying index. And that word right there, daily, it's the one that matters most. Just like we saw with Beta Pro, these funds reset their leverage every single day. So why exactly is that important? The math behind daily resets, it doesn't play nice with volatility. Not even close. Even even if the underlying index ends up flat after a few days of ups and downs, a leveraged ETF can still lose value because of something called volatility drag. I can easily say that, but you know what? Let's put some quick numbers on it so you can kind of see the problem in action. First of all, let's look at it without leverage. So say the index starts at $100 day one. It goes up 10%, nice and easy. It's now worth $110. Day two, it drops 9%, which brings it right back to about $100.10. Almost flat. And that's pretty much what you would normally expect. Let's now look at that 3x ETF tracking the same index. And oh boy, the math is about to get very interesting. So initially, it goes up 30% on day one, 3 times that 10%. So that takes that $100 up to $130. Great. But then on day two, it falls, 27%. So that's 3 times that original 9%. And so that's 27%, not of 100, folks, but of the 130. And that, oh boy, that actually lands you at $94.90. So even though the index is basically back where it started, that leveraged ETF has lost more than 5%. That's the power or the pain of compounding on a moving base. Each day's return applies to a new balance, and the daily reset, oh boy, it makes that math unforgiving in volatile markets. So the more the market swings up and down, the more those tiny differences add up against you. For this very reason, these ETFs are for short-term plays, quick tactical moves, not something to hold for any real length of time. Not really an ETF I would leave unattended. They're built for traders who have a clear target, a clear stop, and a timeline measured in hours or days, but probably hours, not weeks or months. If you're the kind of investor who checks your portfolio once a week, these are not your friends. You should stay away from them, 100%. But if you're an active trader who thrives on momentum and understands exactly what daily reset leverage means, they can be a powerful and still dangerous tool. A sub to the channel is the best way to safely leverage future content. Instead of calling their ETFs bull or bear like Beta Pro does, Longpoint uses long and short. So Yeah, it's pretty basic. A long ETF is the bullish one. It goes up when the underlying index goes up. A short ETF is the bearish one. It rises when the underlying index falls. And then they layer in two flavors of leverage, as we mentioned before. We got Save, which means 2 times daily exposure, and we have Mega, which means 3 times daily exposure. Oh boy. So if you see something like the Mega Long S&P 500 ETF, that's a 3x bullish position on the S&P 500. If it's a mega short version, that's a 3x bearish position betting against the S&P 500. Without a doubt, it is clever branding, but make no mistake, the risk underneath is the same math we just covered. The daily reset still applies, and whether you're Save or Mega, the leverage cuts. It cuts very deep both ways. Before we actually get into looking at some of these funds, I do want to make it very clear. The only reason I'm making this video is so that you're aware they exist, and if you do run into them, you probably should stay away from them, and this will hopefully for most of you, this is going to scare you, and that is intended 100% for sure. We've got 24 different Longpoint ETFs on the market right now, and there's no time like the present to take a quick peek at what they have to offer. From S&P 500 to NASDAQ, from bulls to bears, and from Save to Mega. It's a full buffet of leverage for anyone brave or maybe stupid enough to fill their plate. Let's start with the big hitters. We'll start with the Mega. So these are our 3X. We'll begin with technology. So we've got QQQU, that's the Mega Long 3X NASDAQ 100 Daily Leveraged Alternative ETF. So this, if you're very bullish on tech, this one could be for you, but like I said, guys, these are so dangerous, very, very dangerous. So be careful with these. We also have QQQD, and that's of course the Mega Short. So the negative 3x. Negative 3x NASDAQ 100 Daily Leveraged Alternative ETF. So this is one you would use if you think the NASDAQ is on the way down for the day. We also have SOXU. So this here is the Mega Long 3x US Semiconductors Daily Leveraged Alternative ETF. And likewise, we have a short SOXD, the Mega Short Negative 3x US Semiconductor Daily Leveraged Alternative ETF. All right. We also have our S&P 500 ones. So SPYU Mega Long 3X S&P 500 Daily Leveraged Alternative ETF. And if you're down on the S&P 500, we got SPYD, the Mega Short Negative 3X S&P 500 Daily Leveraged Alternative ETF. What about that U.S. Treasury? If you want to play the Treasury, yeah, they got you covered there. TLTU, the Mega Long 3X 20-plus year U.S. Treasury Daily Leveraged Alternative ETF. That's a mouthful, that's for sure. And TLTD, which is the Mega Short version, negative 3X 20-plus year U.S. Treasury Daily Leveraged Alternative ETF. Here's where things get a little bit interesting. They have some Canadian ones. So that's kind of cool. We've got BNKU, that's the Mega Long 3X Canadian Banks Daily Averaged Alternative ETF. We do not have a short for that one. We also have the CGMU, which is the Mega Long Canadian Gold Miners Daily Leveraged Alternative ETF. That is a 3X. I forgot to mention the 3X. We also have a CGMD. So with gold, we do have a short. This is the Mega Short Negative 3X Canadian Gold Miners Daily Leveraged Alternative ETF. All right, so those are our mega ones. Let's dial the risk back a little bit. I'm starting to feel better. We'll look at the technology from the Save line. We have AAPU, the Save Long 2X Apple AAPL ETF. We also have AMZU, the Save Long 2X Amazon ETF, ALPU, the Save Long 2X Google ETF, MSFU, the Save Long 2X Microsoft ETF, NVDU, the Save Long NVIDIA ETF, NVDD. Now, with NVIDIA, we got a short. This is the Savi short, negative 2x NVIDIA ETF. We also have TSLU, so the Savi long 2x TSLA or Tesla ETF. We have TSLD, that's the Savi short, negative 2x Tesla ETF. Well, that, guys, is technology. They also have some energy ones in here, and this is still in the Savi line. We have CLUP, which is a Savi long 2x geared crude oil ETF, and CLDN, which is the Savi short negative 2x geared crude oil ETF. They also, well, if you like the natural gas, they have the NGUP, Savi long 2x geared natural gas ETF, and the NGDN for the Savi short negative 2x geared natural gas ETF. Whew! And they have some Canadian ones as well. So we have ABXU, the Savi long 2x Barrick ETF, and CCOU, the Savi long 2x Cameco ETF. I do love Cameco. We have CNQU, the Savi long 2x Canadian Natural Resources ETF. We have COMU, the Savi long 2x CIBC Equity Linked ETF. CSUU, the Savi long Constellation Software ETF. NBCU, the Savi long National Bank, so 2x National Bank Equity Linked ETF. RBCU, the Savi long 2x Royal Bank Equity Linked ETF. TDU, the Savi long 2x TD Bank Equity Linked ETF. And we've got SHPU, the Savi long 2x Shopify ETF. And this one you can short as well with the SHPD, the Savi short minus 2x Shopify ETF. So here's the bottom line. Longpoint's ETFs might have new names and slick branding, but the story underneath is the same one we've warned you about before. Daily reset leverage doesn't care how confident you are. These funds can move fast, but they don't move fairly. The math will always win. And if you're not watching closely, well, it'll take your portfolio to school for sure. They're not bad products. They're specialized tools. Used correctly by short-term traders who know exactly what they're doing, they can deliver incredible precision and opportunity. But for most investors, especially anyone using a TFSA or an RRSP, these are about as appropriate as juggling chainsaws on a treadmill. So if you do decide to touch them, treat them with respect, clear rules, and for the love of banana bread, have an exit plan. If you are interested in any of these ETFs we looked at today, don't forget to put in a double or triple heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on our TFSA challenge. It's much safer. Thank you for watching, and I will see you in the next video.